All right. Good morning, hockey family. It is Monday, January the 13th, 2025. I hope everyone had a nice weekend. Feels really good to be home. Obviously, I was up in Minnesota with my family and my wife's family for over the holidays, like I shared last week, and then just went right on the road for a long time to see a lot of guys and their families. And you kind of did the same, Strax.
Yeah, same. Over to Florida for Christmas, and then been on the road a bit, and obviously we're home this week, which is nice to have a full week in the office. But a bunch more travel coming up. So,
yeah.
Hope to see you guys on the road. So last week we got the Q1 newsletters mailed out, so I'd expect you to receive those, this week, maybe early next week at the latest. If for some reason those don't come through, please let us know.
Yep. And so one of the main things on the newsletter, obviously, just in terms of taxes, right? So kind of waiting for 1099s to get created from the custodians, like Charles Schwab. And then, what we do in the office here, we put together kind of a 1099 summary letter. So look for that. We'll mail that out separately in the coming weeks here. Also, in terms of taxes, kind of an interesting development up north.
Yeah. So obviously, most people probably know Trudeau resigning last week. Just the one kind of, like I said, planning piece of that is that it's caused a little bit of confusion, I guess, with this increased capital gains inclusion rate and whether that was still going to kind of be put into action. But from basically what we see out of the CRA, we think it will be, but obviously we'll continue to monitor it. And that'll be just one piece of the planning stuff.
Yep. And then, looking more here in the U.S., pretty much positive economic data across the board last week, which I guess can be a little bit of a problem in terms of interest rates, but
right. So a lot of positive data. We saw the jobs numbers, 256,000 new jobs, which is way over estimates. Unemployment rate dropped to 3.9%, and then we saw 2.7% growth in the GDP in Q4. So.
Yeah, and again, like all this, kind of better than expected economic data. You saw equity markets pull back a touch like they did at the end of last year, kind of continuing that correction of sorts. And this all comes down to interest rates. It's just the way it is at this phase of the economic cycle. When we continue to get economic data that's stronger than expected here in the U.S., the next domino to fall, the expectation is that the Federal Reserve isn't going to cut rates as many times as the market is hoping for, right? So just looking at the way, futures markets, the way things are pricing out, we're only expected to get one rate cut now in 2025, just given the strength of some of this data. So if interest rates are higher, it's more difficult for the boardrooms of the biggest and best businesses in the world to find profitable projects. Okay, and so not surprising at all to see equity markets take a step back, which I think is really healthy, by the way. So, I think it's probably a good thing long term.
Yeah, and then this week we can look forward to, we're going to get more inflation data. We're going to see the retail sales numbers, and we'll also see some housing data.
Yep, and on the inflation front, it's always fun to see last month's consumer price index, producer price index. So we'll have a close eye on those pieces. And again, like Strax mentioned, really excited. We're going to be back on the road here in another week or so. Another long trip. Just fun part of the job to go out, watch some hockey and see many of you. So questions, comments, concerns, please don't hesitate to reach out to our team, and we'll talk to you soon. Thanks.